Hi all, welcome to Diversified Finance. My name is Lakal. Just a quick video in regards to the housing market. As you all know, Scott Morrison came up with this first home buyers deposit scheme 1 week before the election, and they have won the election. And recently we've seen RBA cut interest rate by 25 basis points, and APRA has reduced the mortgage serviceability rate from 7% to 6.5%. Yeah, these measures are looking good for the home buyers. It will allow people to borrow a little bit more money. But as per the RBA, they are coming up with these measures not to boost the housing market. They are coming up with these measures, so-called emergency measures, because they're seeing the economy is kind of like going down the hill. So these are emergency measures to recover and make sure that we won't go into recession. So I know a lot of people like excited because they saw like their value of their houses kind of like going down. Then they start to see they accumulate negative equity rather than positive equity. So I know people are kind of excited, but this could be very short term because the underlying problems in the housing market are still there. We have a massive oversupply, and people are still massively in debt. We are not seeing much wages growth, and investors are still struggling to to change their interest only loans to principal plus interest. And who knows, this could be very short term, as I said before. 3 years down the line, Labour can win the next election, and they might come back with negative gearing and capital gain changes. So the best thing is for us to do is kind of reduce your debt, and then minimize the exposure to this the economy and the banks, and um, uh, reduce your repayment. So it would be regardless of interest rate goes up or down, we don't need to bother so much. So three things I just want to mention. For first home buyers, even though you only need to have 5% deposit in the future, but be very careful, because if you put like a 5% deposit and the housing market goes down by 5%, you lose your equity. So you basically lose your deposit. So regardless, even if the government says government allow you to have a smaller deposit, less you borrow, better for you, right? So even if you can make a 30% down payment, just go for it. Or even if it's 20%, go for that, and then that means you borrow less. So if you borrow less, your repayments will be lower. And always plan to reduce your debt, other than trying to pay it for 30 years. That's a long time, and you end up paying a lot of interest. And the second thing is the people who missed out back in the bull market, who could not sell their houses, and people who got probably 5, 6, 7 investment properties. This could be their last chance to sell and reduce your investment properties. Say if you have five, maybe you would be able to sell maybe three properties out of that. And if you have enough equity there, you can use that to reduce the mortgage of other two houses. Or if you were waiting and if you missed out, you can just completely get out of the housing market, because we are not seeing this gonna recover very soon. And the most important thing is this is why people need to worry about the election. Why we need to worry about the election, what kind of government gonna come to power, or why we need to worry about the economy and all that. Because I would think because we borrowed too much money. If we borrow too much money, you need to worry about the job security. You need to worry about what the next government gonna do, change if the government gonna do any changes for negative gearing or capital gain tax. You need to worry about it. So all this happened because we borrowed borrowed too much money. So the best thing is, if you haven't borrowed any money yet, the best thing is, when you borrow, make sure you borrow less. And then if you have a little bit too much debt, maybe it's time to sit down and then start saving a little bit extra money, and then reduce your debt to a manageable level, so things will be easy for you in the future. So even if there's economic crisis, even if you lose your job, there won't be an issue, because you don't need to rely too much on your job, because your repayments are very lower. So you can do a part-time job or second-hand job or something, just to make sure that you pay your bills and then mortgage repayments on time, and it would be easier for everyone. So that's all for today. Thanks for your time. I'll talk to you in the next video. See ya.